The Forex market is the largest financial market in the world with a daily trading volume of around 7.5, not billion, but trillion dollars every single day. What is the Forex market and how can you make money off of it? Without wasting my time, let's get into it. So now, what is Forex? I believe that it's a question that you have been asking yourself for a very long time. Today, we are going to delve into it and then see what it actually entails. All right. So you can see that Forex stands for foreign exchange. Okay. It stands for foreign exchange. So now you have the word FOR, all right? So the letters FOR stands for foreign, and then you have the letters EX standing for exchange. I hope that's very clear. So now, another term that you may come across in the Forex world is FX, okay? So if you see FX anywhere, it also means Forex. Don't get confused about it. Another term for Forex is FX. Now, we are getting to know that Forex is foreign exchange. So now the question is, what are we actually exchanging? Now we are exchanging currencies, okay? We are exchanging currencies. In what form? Let's move on. Forex involves the exchange of a local or a national currency into a foreign currency, or a foreign currency into a local or a national currency. Did you get the point? So now, for example, if you're a US citizen, okay, your local or your national currency is the USD, all right? The USD is the ISO code for the US dollar, all right? So shortened form of US dollar, USD, all right? That's why you see USD here. Now, if you find yourself in a country like Canada, perhaps you went there to visit your relatives, and then one day you decide that you want to go out and then buy something at the local grocery store. Now, you cannot use your USD to purchase anything in Canada. So what you have to do is that you have to go to a local Forex bureau and actually exchange the USD into Canadian dollar, represented by the ISO code CAD, all right? So the very act of you exchanging from USD into Canadian dollar is foreign exchange. I hope you get the point. Now, in the same way, if you're a Nigerian citizen, your local or a national currency is a Nigerian naira, which is represented by the ISO code NGN. Now, if you should find yourself in a country like the UK, and on a fateful Saturday morning, you decide that you want to go out and watch Manchester City versus Liverpool at the Etihad Stadium. Now, you cannot use your Nigerian naira to purchase tickets. What you have to do is that you have to convert your Nigerian naira into pounds, all right? Pounds here is represented by the ISO code GBP, Great British Pound. So the very act of you exchanging from Nigerian naira into pounds is what's called a foreign exchange, FX, okay? It doesn't only work directly like this. The reason why I'm saying that is that if the US citizen should find himself back from Canada into US, and then perhaps his relatives or her relatives gave her some Canadian dollars back into US soil, he cannot spend those Canadian dollars in US. So the very act of her having to convert Canadian dollars back into USD is also a foreign exchange, okay? So from a foreign currency into a local or national currency is also an act of foreign exchange. I hope you get the point. The same way the Nigerian citizen finds himself back from the UK into Nigeria, now he has some pounds with him, okay? Now, he cannot spend pounds in Nigeria. So he has to convert the foreign currency, which is the pounds, back into his local or national currency, which is the Nigerian naira. That is also an act of what? A foreign exchange. I hope you get the point. All right, so let's move on. Okay, so now that we have been able to establish what Forex is all about, let's move on to what Forex trading is. So what is Forex trading? Now, Forex trading is the buying and then selling of currencies to make a profit. All right. So that is Forex trading. Now, mind you that these currencies are not physical currencies. So in Forex trading, we are not actually dealing with physical paper money. What we are dealing with are contracts called currency pairs. Do you get the point? They are called currency pairs. These are like already made, standardized pairs, which are, are there for Forex traders to trade. All right. So they are already made. You can't do anything about it. Do you get the point? I'm trying to break it down as simple as possible for you to understand. Now, I don't want to go much into currency pairs because we have different types of pairs. All right. But I'll give you some examples of the major pairs that we have. So examples of the major pairs that we have include GBP USD, Euro USD, USD CAD. Okay. Now, I told you in the previous video, I believe that you know what GBP means, right? Great British Pound / USD, all right? US dollar. Now, what does this mean? Now, this pair establishes the exchange rate relationship between the pound and then the US dollar, okay? So it tells you the exchange rate between the pound and the US dollar. As simple as that, okay? So now, Euro USD also establishes the exchange rate relationship between the euro and then the US dollar. The same way with the USD CAD, which establishes the exchange rate relationship between the US dollar and the Canadian dollar, CAD. All right. So that is that. Let's move on. So now these currency pairs that I've already explained to you actually have values attached to them. Okay. So if you pick up GBP USD, for example, it will come with a value like 1.35574. Okay. That is the value that they usually come with, right? With a pair like GBP USD. It has about 5 decimal places. All right. So as at the time of making this video, that was actually the value that was attached to GBP USD. All right. Now this value, pay attention, is called the price of the pair. Okay. This value right here is called price. All right. Kindly take note of that. So now, how do you find this price? Some of you may be wondering how I came about this price of the pair. Now, to find the price, you have to go to tradingview.com. Okay, so that is the most popular trading analysis platform that a lot of or most Forex traders use, right? Tradingview.com. That is where you can actually find the price of this pair. Now, in Forex trading, one thing that you have to take note is that we do not usually consider the last decimal place of the price. Okay, so I've told you that the price is this figure, all right? So it has about 5 decimal places. Is that not it? 1, 2, 3, 4, 5. So usually the last decimal place, which is the number 4. So this is the first decimal place, second, third, fourth, and the fifth. So this is the 5th decimal place, all right? We do not usually consider that figure. So in trading, we don't consider the last figure. So you usually come to realize that most of the trading that we'll be doing it with just 4 decimal places. Okay. All right. So the pip count actually starts from the 4th decimal place. Okay. So this is where the pip count actually starts from. I'll explain what a pip is, right? So those of you who may be wondering what it is, I'll explain it as we move forward, all right? But I hope that it's very clear for now. Let's move on to what we have next. So now I believe that the part that you are waiting for is here. How do you make money in Forex? Now the Forex market is a speculative market. Okay. Now what does this mean? Now it means that you are going to make predictions on price based on empirical analysis, not based on guesswork. You are not guessing. All right. If you are guessing, that makes it gambling. And this is actually the part that actually confuses a lot of people. And it makes people think that Forex is gambling. All right. But Forex is not gambling. You're actually making the prediction based on concrete empirical analysis. Okay. It is not guesswork. You get the point. I'll make a very detailed video about Forex as to whether it's gambling or not, okay, and then explain properly for people to understand, those who may think that Forex is actually gambling. Okay, Forex is not gambling. All right. So in this case, you're actually making predictions based on data, proper empirical data. Okay. So the second part is, what do you actually speculate with? So this is where we are coming to. So you are going to speculate using technical analysis. Okay. That is actually using historical price data to actually predict the future movement of price, right? So that is technical analysis. And this is basically about the chart. Okay, I beg your pardon, the chart. I'm talking about the chart, looking at the chart and then doing your analysis and then trying to predict where price will go next. Okay. I told you earlier on in the previous slide that the popular trading analysis platform is TradingView. Okay. When you go to tradingview.com, okay, that is when we do the chart analysis. All right. Okay. So that is the most popular chart analysis platform that we have for Forex traders. I'll make a very detailed video about that platform later on. Okay. If I should go into that platform, it would take a whole lot of time. So that is technical analysis for you. All right. So the next thing that Forex traders actually speculate with is fundamental analysis. Okay. So if I say fundamental analysis, I'm talking about economic indicators like GDP, like interest rates, like inflation rates, and the like. All right. As well as geopolitical events. Okay. So world leaders may come out and say something that will also and can trigger the market. Okay. So these are the two things that you normally analyze before you speculate. Okay. So how do you do that? So you actually speculate on the values of the pairs. I told you what the values are in the previous slide. Okay. So if you speculate that GBP USD's value or GBP USD's price will actually go up, you are making a buy speculation. Okay. And if you actually speculate that GBP USD's price will fall, that is a sell speculation. I hope that this explanation is very simple for you to understand. Okay. All right. So let's move on to what we have next. So now to explain further, let us give ourselves an example so that we can better understand how to make money in Forex. Okay. So I told you earlier on that the Forex market is a speculative market, which means that we're actually predicting on the movement of price. Okay. We're actually predicting whether price will actually go up or go down. Okay. So in this example, we are using the GBP USD. Okay. So let's say that based on our analysis we did on technical analysis and then the fundamental analysis, we actually find out that price will actually go up. Okay. So based on the value that I gave you, GBP USD's price is currently at 1.3557. I told you that we only consider the 4 decimal places. We don't consider the 5th decimal place. I hope you get it. So now, if we predict that it will go up, and actually did, so price actually moved from 1.3557 to 1.3567. Now there is a change. Now how much is that change? Now the change is 10 pips. Now I believe that this is the first time of you hearing the word pips. All right. Now what then is a pip? A pip is the change in value of the price of a pair. Okay. So we can have unlimited number of pips. Okay. So let's do another one. Let's see whether you really get the concept. Okay. So 1.3557 to, let's say, 1.3657. What is the pip change here? All right, how many pips has it moved to? All right, I'm giving you some few seconds. All right, so if you actually say 100 pips, you're actually right. Okay. All right, so I believe that you have gotten this concept of pips. So let me take this one off. All right, so let's go back to our actual example. All right, so in our actual scenario that we are analyzing, right, okay, the actual pip change is 10 pips. All right, so I explain what pip is. It's a change in the value of the price of a pair. So that's 10 pips. Now how do you find the profit? All right, so the profit will be equal to the number of pips, in our case is 10 pips, multiplied by the units of currency which has been placed on the trade. Okay, now these units of currency is called lot size. We have so many types of lot size. I don't want to go into lot size right now to lengthen the video. All right, so now let's choose one of the lot sizes. One standard lot is actually equal to $10. All right, one standard lot. So let's say we place one standard lot on this trade. Okay, so it will be, I don't want you to get confused, 10 multiplied by, I told you one standard lot is equal to $10, so multiply by 10. So the final profit you made on this change here is 10 by 10 is 100. So that is $100. I hope that is very clear for you to understand. Okay. All right. So now let's move forward to some of the important things that you have to take note of. Okay. Okay. When do you trade the Forex market? Is it something that you can, just get up from your bed and then start trading? So let's look at how it is like. Okay, so now the Forex market is open 24 hours a day, 5 days a week. So it is open from Sunday evening around 10 p.m. GMT and then closes at Friday evening 10 p.m. GMT. That is the same time. Okay, so this actually means that you cannot trade on weekends. You can't trade on Saturday and Sunday. So for example, if you open a trade on Friday, you cannot do any adjustment or change anything on the trade unless Sunday evening around 10 p.m. GMT. All right, this time also depends on what you call daylight savings time. Okay, all right, sometimes daylight savings. Okay, it also affects these times by 1 hour. All right, so take note of that. So with that being said, doesn't mean that you can just get up and then trade anytime that you want. No, it is not like that. We have sessions in the Forex market. Okay, we have the London session, we have the US session, we have the Asian session. All right, and different pairs respond differently to the various sessions. Okay, so what I want to tell you is that there are some pairs which are more profitable in a particular session than the other. So it doesn't mean that you can just get up and then trade any pair at any time that you want. Okay, all right, so this video was to give you an overview of how the Forex market is. I told you earlier on that I don't want to go much into detail about the whole thing because it will lengthen the entire video. Subsequently, I will make a very, very detailed video stipulating step by step if you're a beginner on how to start trading actually. All right, but this is just to give you an overview of the whole Forex concept. All right. Okay, so I believe that is the final part of the video. So what do you need to start trading? All right, so these are the 6 things that I've written down for you to start trading Forex if you're a total beginner. All right, so the first thing that you need is you need knowledge in Forex. All right, if you don't know something and you immediately want to jump in, you know that you're going to break your leg. All right, so I would always recommend that you have knowledge in Forex trading. All right, you actually know what you're doing, because in this trading, if you don't know what you're doing, you are actually going to either lengthen your learning curve, as I told you in the previous video, or you're going to lose a lot of money. So that is the reason why you need to have that knowledge before you start trading Forex. All right, so the next thing that you need is that you need a laptop or a desktop. There is a reason why I'm saying this. All right, now the laptop or a desktop will give you a very broad interface for you to analyze your charts and your trades and all that. Some may say that okay, just okay to do that on your phone, but the phone is not, I mean, very ideal. It doesn't have a very broad interface for you to actually zoom in on the charts and then look at the bigger picture when it comes to trend analysis and then market structure and all that. Do you get it? The phone will not give you that kind of broad interface. That is why I'm recommending a laptop or a desktop. Okay, so the third thing that you need is the trading analysis platform. All right, so I mentioned earlier that you need a platform whereby you analyze your charts. All right, so the one that I recommend is tradingview.com. Very popular. A lot of Forex traders use that trading analysis platform. All right, so in Forex also you also need what we call a Forex broker. The Forex broker serves as a middleman between you and the actual markets where you'll be placing your trades. Okay, so you are going to be provided with a server. All right, you are going to trade on the broker's server. You can't trade on your own. You don't have that, technology. So the broker will offer you that server so that you can actually enter into the Forex market. That is why you need a Forex broker. In Africa, the popular ones are, HFM Markets, Exness. I'm not recommending them. I'm just saying that they are very popular. I've used Exness myself. So these are the most popular. We also have IC Markets, and then we also have XM Markets. All right, so these are the Forex brokers that we have out there. All right, so you, apart from the Forex broker, you also need a trading app where actually you enter the lot sizes that you'll be trading with. Okay, so the popular ones, you have the MT4, you have the MT5, you also have one called C Trader. All right, so the one that I recommend is MT5 because it has more features. Okay, it's more advanced than the rest. I've not tried C Trader before. Okay, so but as a beginner, the one that I would recommend is MT5. Okay, and that is that. And the last thing that you need is you need money. Of course, you have to have money before you can make money. All right, so I would suggest that have an amount of money that you can actually risk. Okay, start with an amount of money that you can actually risk. It can be $10, it can be $20, depending on the broker. Some brokers offer as low as $10. All right, so depending on the broker, some brokers have their minimum amount that you can deposit to be around $50. So just check it with your broker or the broker that you want to trade with. All right, as I told you earlier on, I don't want to make this video very, very detailed. Other than that, I would have gone much into how to choose a broker and all that. I will make this video very lengthy if I do that. So, and that will be for subsequent videos. But I believe that this video has offered you a broader insight into how the forex market works, and I believe that this video will benefit you very, very well. All right. So I believe that this video has been very beneficial to you. Don't forget to subscribe as I make much more educational and beneficial content like this. I'll see you another time.